All right, welcome back to Ticker Shock, your 7-minute dive into the market movers. Today, we're dissecting Intel, a titan of the semiconductor world. So, here's the big question. Is Intel about to get a massive government bailout or a significant endorsement from a global tech giant? Stick around because the headlines have been a roller coaster, and we're going to break down what it all means for your portfolio. Let's get straight to the news. We've got two massive developments hitting Intel. First, SoftBank is investing a hefty $2 billion into the company, buying about 2% of Intel shares. This is huge. It's seen as a major vote of confidence, especially with Intel facing tough competition in the AI chip space from the likes of NVIDIA. SoftBank CEO is framing this as a commitment to U.S. tech leadership, with Intel right at the heart of it. Now, the second piece of news, and this one's a bit more complex, is the report that the Trump administration is considering taking a significant stake, around 10%, in Intel. This could mean converting some or all of Intel's $10.9 billion in CHIPS Act grants into equity. While government involvement might sound good, investors are currently reassessing what this actually means, and the market's reaction has been mixed, to say the least. So, who exactly is Intel? Incorporated way back in 1968 and headquartered in Santa Clara, California, Intel is a global powerhouse in designing, manufacturing, and selling computer products and technologies. They operate across several segments. Their biggest revenue driver is the Client Computing Group, or CCG, which brought in a massive $30.29 billion, making up 45.55% of their total revenue last year. This is their bread and butter, the processors you find in most laptops and desktops. Then you have Intel Foundry Services, or IFS, which is a huge growth area, pulling in $17.54 billion, or 26.38% of revenue, and saw an insane growth of over 1,700% year over year. That's their chip manufacturing service for other companies. The Data Center Group, DCG, brought in $12.82 billion, about 19.28% of revenue, but saw a decrease of over 17%. And finally, the Internet of Things Group, IoTG, contributed $5.84 billion, or 8.79%, with a slight increase. Geographically, China, including Hong Kong, is their largest market at $15.53 billion, followed by the United States at $12.99 billion and Singapore at $10.19 billion. Intel's gross margin is around 29.76%, but they're currently operating with a negative operating margin of negative 8.29%, which means their expenses are higher than their income. For 2025, the EPS forecast is a projected $0.93. Now, let's get to the core of it. How does this news impact Intel's bottom line? The SoftBank investment is a clear positive signal, boosting investor confidence. The potential government stake, while carrying some uncertainty, also highlights Intel's strategic importance. We're looking at the potential for increased investor confidence and strategic alignment with government initiatives, which could indirectly boost demand and R&D support across all their segments. So, how do we get to that number? We're estimating a potential 1% revenue increase due to this improved sentiment and support. Now, here's the key part: operating leverage. Given Intel's significant fixed costs in R&D and manufacturing, we're using a multiplier of 2.0. That means for every 1% change in revenue, their operating income could change by 2%. So, that potential 1% revenue hit, multiplied by 2.0, gets us to a 2% potential positive impact on operating income. With Intel's current negative operating margin, this improvement is crucial. This could translate to an estimated positive impact of about 5 to 10 cents on their projected 2025 EPS of 0.93. We've modeled 3 scenarios for the EPS impact. There's a 20% chance of no significant impact. A moderate impact, where we see that 5 to 10 cent improvement, has a 60% probability. That's our base case. And there's a 20% chance of a higher impact, potentially boosting EPS by 15 cents or more. As for the market reaction, after SoftBank's news, Intel stock initially jumped 6%. Then the government stake news caused a dip of about 5%. However, the stock has shown some resilience, trading up in pre-market after the combined news. It's been volatile, but the market is clearly reacting, showing us that these developments are not being ignored. So, what's the final verdict? Overall, this news is good for Intel. The SoftBank investment provides a much-needed signal of confidence, and the potential government stake, while needing careful navigation, underscores Intel's critical role in national technology strategy. Both factors point towards a more positive outlook. My take? I'm putting a buy on Intel here. The combination of significant private investment and potential government backing addresses some of Intel's structural challenges and signals a commitment to its future, especially in the critical AI and semiconductor manufacturing space. That's all the time we have for Ticker Shock today. If you found this breakdown helpful, hit that like button and subscribe for more. Remember, this is for educational purposes only and not financial advice. Invest wisely.